$500 billion, can't sky. Why China is quietly walking away from America's debt. China just removed more than $500 billion from the core of America's financial system. Not through a crash, not through a crisis, and not through headlines. It happened slowly, quietly, and deliberately, while most people weren't paying attention. At its peak in 2013, China was the largest foreign holder of US Treasury bonds, with more than $1.3 trillion invested. These bonds are not just pieces of paper. They are the backbone of how the United States finances its government, its military, and its global influence. Today, China holds less than $700 billion. That means more than $600 billion has been withdrawn from America's debt structure, money that once funded US deficits, spending, and power projection. And this wasn't panic selling. The data shows a clear pattern. Month after month, year after year, China steadily reduced its exposure. So the real question is not what happened. The real question is why. To understand that, we have to go back more than 50 years. In 1971, the United States abandoned the gold standard. Before that moment, every dollar was theoretically backed by gold. That system imposed limits. The government couldn't print unlimited money without consequences. When that system ended, many expected the dollar to collapse. Instead, something very different happened. The dollar became the global reserve currency. Oil was priced in dollars. International trade was settled in dollars. Countries held dollars as savings. Why? Because the US had the largest economy, the strongest military, and controlled global trade routes. Trust turned the dollar into the foundation of the global financial system. And this gave America an extraordinary privilege. The United States could spend far more than it earned, year after year, without immediate consequences. While most countries would face a currency collapse or a debt crisis, America didn't. Foreign governments kept buying US debt. For decades, China was the biggest buyer. Here's how the cycle worked! Americans bought Chinese goods. Dollars flowed to China. China recycled those dollars back into US Treasury bonds. It looked like a balanced relationship: cheap goods for America, access to US markets for China. But beneath the surface, something was changing. By holding over $1 trillion in US debt, China was deeply exposed to American financial power. Those assets existed within a system ultimately controlled by Washington. That risk became real in 2022. When Russia invaded Ukraine, the US and its allies froze $300 billion of Russia's foreign reserves almost overnight. Money Russia believed was untouchable simply became inaccessible. This moment sent shockwaves through every major capital in the world. It proved something undeniable. Dollar-denominated assets can be frozen, weaponized, taken. Now imagine the situation from Beijing's perspective. You are officially labeled America's top strategic rival. US military alliances are expanding around you. Technology restrictions are tightening. Taiwan is openly discussed as a potential conflict zone. And at the same time, you're holding hundreds of billions of dollars inside a system your rival controls. What would you do? You wouldn't wait for a crisis. You wouldn't sell everything overnight. You would quietly reduce your exposure. That's exactly what China has been doing. But China didn't just sell bonds, it built alternatives. First, it developed CIPS, its own international payment system, an alternative to SWIFT. This allows money to move across borders without relying on Western-controlled infrastructure. Second, China aggressively pushed the yuan into global trade. More trade deals are now settled in yuan instead of dollars. Currency swap agreements are spreading. Yuan clearing centers are opening worldwide. Third, and most importantly, China has been accumulating gold. Gold cannot be frozen. It cannot be sanctioned. It cannot be printed. It exists outside political control. China has been one of the world's largest gold buyers for years, quietly building a reserve that protects it from financial pressure. And this isn't just China. BRICS nations are trading in their own currencies. Central banks are buying gold at the fastest pace in decades. Saudi Arabia is openly discussing selling oil in non-dollar currencies, something unthinkable just 10 years ago. According to the IMF, the dollar's share of global reserves has fallen significantly over the past 2 decades. Not a collapse, but a clear trend. This doesn't mean the dollar is finished. There won't be a sudden replacement. What's happening is fragmentation, a world where the dollar still matters, but it no longer dominates everything, where multiple financial systems coexist. For the United States, this creates a serious problem. America runs massive deficits. Interest on the debt alone costs hundreds of billions per year. If foreign buyers step back, someone else must buy that debt. That someone is often the Federal Reserve. When the central bank buys government debt, it effectively creates money. We saw this during the pandemic, and the result was the highest inflation in 40 years. Inflation is not neutral. It hits savers. It hits workers. It hits anyone living paycheck to paycheck. So the choices become painful. Cut spending, raise taxes, or print more money. There is no painless option. This is not just an economic shift. It's a shift in global power. The financial system that supported American dominance for over 50 years is slowly changing. Not with explosions, not with headlines, but with quiet decisions made over years. Most people won't notice until the effects show up in their daily lives. Higher prices, weaker purchasing power, more instability. This isn't about fear, it's about awareness. The world is entering a new financial era, and those who understand it early will be far better prepared for what comes next.